Hello traders, today I'm going to give you a secret of using ICT Fair Value Gap. And most of the time, some traders who form their trade based on fair value gap, and you actually wonder why the trade end up in loss. Well, there are so many things you need to consider while using fair value gap. So what is this fair value gap? Fair value gap is simply a three candle formation in the case of bearish, where the first candle low does not overlap with the third candle high, and then in the case of bullish, the first candle high does not overlap with the third candles low, leaving a space in between. This also means that in case of this bearish, the bulls are in control and does not offer opportunity for the bears to actually close this gap, leaving an inefficiency behind. It is expected that price will in future come back and fill this gap to attain fair valuation, to attain fair value of price, right? So this is basically what fair value gap is. So if you're framing your trade based on fair value gap, number one thing that you need to consider is what institutional order flow. Institutional order flow giving you the direction of the higher time frame, and framing your trade based on where the price is currently at, where has the price traded to, and where the price is going to next. That is your draw on liquidity. These three things will actually help your fair value gap to give you the best trade setup you ever imagine. Now let's look at this. Now on the higher time frame, my bias is already bearish, and then I'm expecting price to actually trade and take this low and actually fill this daily fair value gap. We have a daily fair value gap here, which is a draw on liquidity. So already on the higher time frame, I'm expecting price to be bearish. So what is left is for me to go to my lower time frame and frame my trade setup based on fair value gap. Fair value gap only does not define trade setup, but it forms a prime part in your trade entry. Especially somebody like me, I like entering my trade based on fair value gap. Most of my trade entry are in fair value gap. So in this scenario, I'm expecting price to go bearish on the higher time frame, and I'm on my lower time frame looking at what signature price is actually printing, right? So this is what we have here. We have a higher time frame. We have on 1 hour price took up this high in the form of buy side liquidity, and we've seen price actually giving a little consolidation here, creating high and then lows, and then taking this high, and price grab liquidity below this low. I will not consider this as shift of market structure, right? I will not consider what happened here as shift of market structure, because price only grab liquidity below this low with a wick and does not close below the low with a candle body. Most of the time I define my market structure using the wick, but break of market structure or shift of market structure, I define it with candle body, right? So we have price coming to take up this high again, and finally we have market structure shift here. This means this low was taken out with the candle body closing below the low. And then what is the next thing to do after getting market structure shift is to look for fair value gap that broke that market structure. And we have here this fair value gap, right? We have this fair value gap here, and this is the exact point I would like to enter my trade. Immediately, let me remove this thing because I think it's actually interfering with the candle wick. So immediately price retested this fair value gap. This is my perfect entry. And my stop loss will be above this candle high, most of the time, to actually reduce my risks, because I can't the risks will be much if I place my stop loss above this. So I will most likely place my trades above this high. If this fair value gap is valid, there's nothing that will actually make price to really take up this high. And then how do we know that this fair value gap is actually a high probability fair value gap? You will notice that if a fair value gap is a high probability fair value gap, the candle will not close inside the fair value gap. You will most likely see that it is the wick that will actually retest the fair value gap, but the candle will really close below the fair value gap or above the fair value gap in bullish condition. And that is what happened here. You can see the candle wick closing the fair value gap completely, but the body closed below the fair value gap. This is a perfect fair value gap, right? And then you now continue to see price moving lower. We've gotten another second entry on this trade, because after breaking this structure, we have a fair value gap that actually ate the breaking of the structure, and we've seen price moving to retest the fair value gap again. Let me remove this so that it will be clear for you to see. Can you see it now? We've seen price actually retesting the fair value gap. And what did I say earlier is that in most cases, high probability fair value gap will actually resist price in this kind of condition, which means it is only the wick that will actually close the fair value gap or retest the fair value gap, but the candle body will close below the fair value gap in high probability condition. And that is the same thing that happened here, repeated itself here. The fair value gap retested it, and then the wick only, the body closed below the fair value gap. This is our second entry on this trade, and you can see a beautiful trading session, right? So this is some of the few secrets you blend with your fair value gap, making sure that you are actually looking at your trades in the direction of the higher time frame. You are framing it based on where the price is coming from, where the price is at, and where the price is going on next your draw on liquidity. We've not achieved our objective because we still want price to really come and fill this daily fair value gap. I hope you find this insightful, guys. And if these little lectures have actually helped you, hit the like button and don't forget to subscribe for more content from me. Thank you, guys, and I wish you a great trading week upcoming.